What's good, YouTube? It's your boy Andrew back with another video. As you can tell by the title, we're doing a weekly trade breakdown, going over how I was able to go 3-1 in the market this week and net me $600 profit. Without further ado, we're going straight to the charts. So as you can see, when we back it up, price was clearly in an uptrend. My reasons for entry were trend, demand zone, and A1 wick rejection. This zone I would consider low probability because it broke above the structure sitting right here, but it didn't break above this, like the most recent high. So I really would have wanted price to come back to it to take a buy off of that. And the only reason I took this trade without having that was because of the A1 wick rejection at the level. So if price would have came down and closed in here, I wouldn't have taken a buy off of this level. But simply because price came back and respected it, I entered and went on with the first target. As you can see, it did what it was supposed to do. So that was my first trade of the week. Actually, no, this was the second trade of the week. First trade was this EU trade over here I took. And we'll back it up to EU. The reason I took this EU trade, I believe, is also trend, supply zone, and A1 wick rejection. So, as you can see, 200 EMA is trading above price, but clearly price is pushing to the downside. So we were in a downtrend. I knew I wanted to take a sell, either a break and retest or a supply zone. Price came right back to the level, gave me perfect A1 wick rejection. Like, it was so clean, I had to zoom in to make sure that it closed, because if it wasn't perfect, if it wasn't A1 wick rejection, my stop loss would have been placed above here, just because of it wasn't perfect wick rejection. But since I did get A1 wick rejection, I left my stop loss here, and as you can see, price did what it's supposed to do. Literally came right to 1-to-1 before going in the other direction. So if I would have placed my stop loss here, wouldn't have gotten out, would have been a losing trade. But because I did what I did, ended up going 2-0 on oh my gosh. Because I did what I did, I ended up going 2-0 for the day. So it was a pretty nice profitable day. Here we have the next day. This is Tuesday the 25th. Same reasons for entry. We got trend, demand zone, and A1 wick rejection. So as you can see, most of our reasons for entry are the same. Came to the chart, you can see the 200 EMA is below price, which means we're in an uptrend. I knew I was wanting to look for buys. And the reason I'm saying I'm looking for buys is, yes, it's in an uptrend, but like, why would you want to sell in this market? You wouldn't want to sell at least until price breaks below here. You know, at least here. You shouldn't even be thinking about selling because of all the candles above that point. So I knew I wanted to take a buy, and I got A1 wick rejection around, what time is this? A1 wick rejection 7:45. I didn't enter on this candle. Yes, it broke above it, but this is so I trade the futures, and on the futures chart, it didn't break above it. So I just decided to wait a little bit. As you can see, the very next candle came and gave me the perfect breakup candle entry, and the rest is history. It did what it was supposed to do. Now, if I would have entered, if I would have entered on this candle, I would have just placed a stop loss below here, and the target still would have got hit. But simply because the entries weren't lining up, and I trade futures, I decided to go off the futures chart and hold off. But as you can see, it did what it was supposed to do. So we were with the right direction regardless. Next day we're going to, this is Thursday. Had a oopsie here on Thursday. I tripped out. So on Thursday I came to the chart and we had price. This was the daily level at the time. So we had price trading at the daily level, and this was the high I initially had marked up. So let's back it up somewhere. So that was the high I initially had marked up, and my mindset was, yeah, we're below the 200 EMA, so I should have been looking for sales. But my mindset was, we're at this 200, we're at the daily level. price just made a lower high, or a higher low, excuse me. So I was thinking it could start trading to the upside. What I missed was the equal highs here, all of the lower highs. We're in a downtrend clearly, and price just broke below that lower low or the higher low. So this just really choppy market structure. But my mindset was, okay, we got price breaking above this level and closing. We got, it's not even A1 with rejection. We just have rejection after it broke above it. And then this next candle, you see price kind of trading above where it previously was at. So I was thinking like, okay, cool, we're establishing some sort of support. And then, yeah, this is terrible trading. Yeah, so in my head, price was establishing support right here. Price with this candle just closed above the daily. And so closed above the daily. To me, this was the rejection of the daily, but I ended up entering on this candle. So I didn't even wait for it to close. That's how confident, or not even confident. That's how pressed I was to enter a trade. The mindset was this candle broke above it, and I'm watching it as it's printed. So this black candle, I watched it come back to here, rejects it, and then begin accelerating to the upside. So that's when I entered. Of course, it was literally the last up candle of the day. So that was just bad trading, going against the trend, not having A1 wick rejection, and not even trading a proper break and retest. So the only thing I did right with this trade was reduce my risk. I think I only lost $100. So that was the only thing I did right with this trade, but that was not a smart trade. I could have taken a break and retest sell down here, or a supply sell from over here. It was just, I don't know what happened this day, but I was pressed to enter a trade. It was 9 o'clock, 9:30. So that's what happened Thursday. But I take you to Friday. Friday we came back and cleaned up. So on Friday, I saw price ranging. So I know at the range you want to sell at the high, you want to sell at the top and buy at the bottom. That's the basics for range trading, which I don't like doing. But it is what it is. So I saw price was ranging. I marked up the range high and low, and I had this actually marked up over here. Yeah, so I marked up the range high and low, and I knew I wanted to take a sell from this range if possible because we're in a downtrend. So yesterday I didn't learn the lesson. I took a buy with the price above 20 MA. So the next day I came in, lesson was learned. We're taking a sell regardless of what I'm thinking. We gotta take a sell if we're taking a trade. So as you can see, price was ranging, and then price came back to the range high as I marked up, or this is what I concluded with the range high, and then it closed inside of it. So price came back to it. First it rejected it, then you had a candle close inside of it, and so I didn't like seeing that. I didn't like seeing that. So I initially wanted to trade from the high. It closed inside of it. So then I wanted to see price rejected again, but it had to be A1 with rejection for me to take the trade because it's range bound. If that makes sense. So I'm a little bit more strict when it's not my preferable market conditions. So either I need A1 with rejection, or I'm going to reduce the risk, or both. Like I'm really selective with the trades, especially when it's in market conditions I don't like. So price was ranging, broke out of it. This black candle right here is when it came back and gave it A1 with rejection. And so from that candle on, I was looking to enter off the break. I didn't get it with that candle, so I didn't enter yet. This is the candle I got it with. My stop loss parameter should have been moved to here, just because of the candle situation, but I didn't. And that was 1-to-1 first target. And I was okay with going 1-to-2 because, as you can see, 1-to-1 didn't even hit the bottom of the range yet. So in my mind, I'm like, okay, it at least has to come to this part of the range. So I was going to watch it and see how it reacted at this part of the range. And if it was like wicking, I was going to take the full 1-to-1. As you can see, price came right through it to 1-to-2. That was all she wrote. I was out. So we had a very good week. Ended up going 4-1 on the week. We had 3 profitable days, 1 losing day, but we took a total of 5 trades and we went 4-1. So pretty good week, pretty nice profitable week, pretty nice and disciplined. I followed my strategy. The one day I did and I paid for it. So yeah, some things to take away from this. A1 week projection to me is the ultimate price action signal. No matter what level, no matter what zone you have marked or whatever, because this is all BS. This is what the chart looks like. It's blank. It's all BS. So how do you know that the level or the zone you just put on your screen is valid? You need price to reject it or react at it. So to me, A1 week projection is the ultimate price action signal. You couple that with a high probability level or a well-respected level or zone, and that alone makes for a pretty profitable strategy. You start combining trend and other things like that, just to put the odds more in your favor. But I would say the key takeaway is A1 week projections, ultimate price action signal. That's what we got last week. But as always, man, I appreciate you guys checking in. It's your boy Drew, checking out. Peace.